These are 9 top stocks in pre-market with big percentage move today. Our review on SLSN. Solesence Incorporated, formerly Nanophase Technologies, is a company blending science and skincare. They focus on clean, mineral-based beauty and makeup, producing everything from sunscreen to cosmetics with their proprietary active stress defense tech. The big move? Solesence just uplisted from the OTCQB to the Nasdaq under the new ticker SLSN. That kind of transition is usually a big positive. It opens up more investor visibility, brings in institutional interest, and makes the stock more liquid. It's a sign the company is aiming to grow and scale. But market reaction was wild. The stock spiked more than 800% in pre-market trading on light volume, which is already a red flag, then got halted at the open for nearly an hour. Once trading resumed, shares crashed over 70%. So yeah, this went from celebration to caution real quick. While the Nasdaq uplisting is a long-term win, today's extreme volatility sparked bearish sentiment. Investors are wary about valuation and whether the fundamentals justify the price action. Solesence has potential, especially with its clean beauty niche, but this stock needs to settle before anyone gets too comfortable. Our review on NAOV. NanoVibronix Incorporated is a medical device company doing some pretty cool stuff with portable, non-invasive tech. Their main products, like UroShield and PainShield, use low-intensity ultrasound to treat things like chronic pain and catheter-related complications. What makes them stand out is that these devices can be used at home without needing a medical professional hovering around all the time. Now, the big news that just hit is they renewed and expanded their exclusive distribution agreement with Duke Hill Healthcare in Australia. Before this, Duke Hill was mainly focused in Queensland and New South Wales. But now, they're rolling out nationwide, reaching all of Australia's states, with real momentum already in places like South Australia and Victoria. A lot of that is thanks to a recent study that showed UroShield is actually helping reduce catheter-related issues, which is a huge win for patients and hospitals. And Wall Street noticed hard. The stock broke out 145% on the press release and was up 179% in pre-market. That kind of move doesn't happen without something meaningful behind it. For a small-cap medtech company like NanoVibronix, this expansion deal plus the clinical validation is the kind of combo that can really shift investor sentiment. Of course, with a pop like this, there's always some short-term heat that can cool off fast. But stepping back, this feels like more than just hype. If the momentum in Australia continues and they can replicate that success elsewhere, we might be looking at the early chapters of a much bigger growth story. Our review on GLXG. Galaxy Payroll Group Ltd is a holding company that's all about payroll outsourcing and employment services. Basically, they handle the not-so-glamorous but absolutely essential stuff, like calculating salaries, managing taxes, housing provident funds, and even offering HR consulting and market research. It's the behind-the-scenes engine that helps businesses keep their people paid and processes running smoothly. This morning, Galaxy caught everyone's attention with a wild pre-market move. The stock was up a massive 71% pre-market, starting off with a 40% breakout right at the pre-market open, and then tacking on another 40% burst not long after. It was a double jump that had traders scrambling. But just as fast as it ripped, that second breakout started to fade as we got closer to the regular session. Now, we haven't seen a formal press release or news headline driving this spike, which always raises the question, is this something real brewing behind the scenes, or just a speculative flash fueled by momentum and volume? When you get that kind of pre-market action with no clear catalyst, it often brings in day traders riding the wave and then bailing out quickly once the momentum starts to cool. For investors, the key is to keep your eyes peeled. If there's substance behind the spike, like a new contract, partnership, or some kind of expansion, that could justify further upside. But if this was just technical traders playing the thin pre-market action, be cautious. Galaxy Payroll isn't a name that moves like this very often, so this kind of price action definitely puts it on the radar. Our review on BTOG. Origin Ltd is a holding company that's been in the Bitcoin mining game through its US-based subsidiary, Sonicash. The business has been all about deploying miners, over 4,200 of them, to be exact, at a facility in Cheyenne, Wyoming, solely focused on mining Bitcoin, not dabbling in other crypto. But now, they're switching gears in a pretty major way. This week, Origin dropped financials for the back half of 2024, and along with that came a big reveal. They're shifting focus from mining Bitcoin to selling Ether edge miners instead. But high operating costs in the US have made mining a tough business to sustain profitably. So rather than burning cash on mining, they're pivoting to hardware sales, trying to play the pick-and-shovel role in the crypto world. Now here's where things got really interesting. Traders loved the headline. The stock shot up 70% pre-market, with a wild 115% breakout at one point. But that euphoria was short-lived. As we got closer to the market open, the move lost steam fast and the price started to slide. Classic pump-and-pullback setup. Financially, they did tighten up the ship a bit. Net losses narrowed by $4.3 million year-over-year, thanks to fewer impairment hits and operational cutbacks. But on the flip side, legal and compliance costs bumped up their general expenses, which could become a drag if not contained. So here's the deal. Investors are probably wondering if this pivot is just temporary relief or a real long-term business model shift. Selling mining hardware in a competitive and cyclical market isn't exactly smooth sailing either. It's an intriguing turnaround story, but with crypto volatility and uncertain margins in hardware, this one's still in speculative territory. Definitely a name to keep an eye on, but tread carefully. Our review on NXU. NXU Incorporated is a tech company working on energy storage and charging solutions, with products like the Q-Cell, Cube, and Cube Plus designed to push the edge of clean energy infrastructure. Lately, though, it's been more about strategic moves than product news, and that's where this latest development comes in. Today, NXU announced it's making progress on its planned merger with Verde Bioresins. This isn't a surprise for folks tracking the name. Shareholders already gave it a green light back in February, with nearly 99% voting in favor of the share issuance tied to the deal. Now, they're down to final checkboxes, regulatory stuff and NASDAQ approval, but leadership sounds optimistic it'll close soon. The company even cited its recent reverse stock split as a key step to get things aligned for the post-merger setup. Now, let's talk stock action. This thing exploded pre-market, up 65% with a 105% breakout right off the back of the press release. But as the regular session opened, that momentum faded fast. It's one of those classic setups where hype meets hesitation. Traders saw the headline, jumped in early, then cooled off as reality set in. There's definitely a bit of cautious energy around the stock now. On one hand, the merger could open a whole new chapter for NXU, especially by expanding into biodegradable plastics with Verde. On the other hand, these types of mergers can come with growing pains, dilution, and a whole lot of question marks on execution. So while the market loved the story for a minute, the fast fade is a reminder that sentiment here is still fragile. Investors seem intrigued, but they want to see this merger actually close, and then see proof that the combined company can deliver. Until then, it's a wait-and-see game. Our review on CYCU. Cycurion Incorporated is a cybersecurity company that works with both government agencies and commercial clients, offering everything from threat monitoring to full IT security solutions. Their ARX platform is like an all-in-one defense system for web apps, designed to keep digital infrastructure locked down and secure. Today, they announced a big win, an expanded partnership with Journal Technologies and a new $22 million multi-year contract to deliver a criminal justice case management system for a state police agency. It's a strong move that reinforces Cycurion's growing role in securing mission-critical justice systems. CEO Kevin Kelly called it a game-changer, not just for efficiency but for raising the bar in justice sector cybersecurity. And the market reacted fast. Shares jumped 39% in pre-market trading, with a 60% breakout after the news dropped. It's a clear signal investors are paying attention. If Cycurion keeps landing contracts like this, it could give the stock more long-term traction. For now, momentum's solid, but let's see if it holds up beyond the initial spike. Our review on ONCO. Onconetix Incorporated is a commercial-stage biotech company focused on developing and marketing treatments and diagnostics in the oncology space. They're behind Entadfi, an FDA-approved daily oral drug for benign prostatic hyperplasia, and Proclarix, a next-gen blood test for detecting prostate cancer with more precision than the standard PSA test. This morning, Onconetix announced it signed a non-binding letter of intent to potentially merge with Ocuvex Therapeutics, a biopharma company with a pipeline of late-stage and commercial ophthalmic products. If the deal goes through, Ocuvex shareholders would end up holding about 90% of the combined company. So yeah, it's more like Ocuvex is the one taking the wheel. Now, the market reacted fast. ONCO stock popped 37% in pre-market trading, with a breakout hitting up to 95% on the PR. But that rally didn't last long. Shares faded quickly into the regular session. That's the market flashing some caution. Investors are likely waiting for more than just a headline, something concrete like a signed agreement, financial details, or maybe clarity on how this shift beyond oncology impacts Onconetix's long-term strategy. So for now, interesting move, but the market's not fully convinced yet. Let's see what shakes out as negotiations continue. Our review on SXTP. 60 Degrees Pharmaceuticals Incorporated is all about tackling infectious diseases, with a special focus on malaria, tick-borne illnesses, and other serious infections. Their lead product, Aracoda, is already approved for malaria prevention, and they're looking to push boundaries with other therapies, like tefenoquine, to fight a range of diseases. This morning, the company dropped some big news. A new patient license agreement with Yale School of Medicine and Yale School of Public Health. The deal focuses on advancing tefenoquine for treating and preventing babesiosis, a tick-borne disease that can cause severe complications if not treated. The partnership is built on research showing tefenoquine's potential to be a game-changer in treating babesiosis, especially for patients who progress beyond the early, mild stages of the disease. The market liked what it heard. SXTP shares shot up 33% in pre-market trading. Investors seem to be reacting to the growing confidence in tefenoquine's broad potential, especially with the possibility of it becoming the first-ever preventive treatment for babesiosis. This news gives a nice boost to the stock, but as always, the key will be how things move forward from here. If this partnership leads to something tangible and, eventually, approval. Stay tuned, because this could be a big one in the infectious disease space. Our review on AGL. Agilon Health Incorporated is a healthcare company focused on providing care for seniors through a unique partnership with primary care physicians across the United States. The company works by establishing risk-bearing entities, RBEs, that manage the healthcare needs of its patients, supported by a holistic platform that includes technology, people, processes, and capital. In the latest news, Agilon Health has received a significant upgrade from Bernstein, moving from a market perform to an outperform rating with a price target of $8.50. This upgrade is based on the analysts' growing confidence in the company's turnaround plan and solid progress in its efforts to improve cash flow, making the risk of a capital raise less likely. Bernstein sees this as a promising sign for Agilon's future, especially given its ongoing turnaround and the positive data points suggesting growth and stability. Meanwhile, Wells Fargo has maintained its buy rating with a slightly lower price target of $6, reflecting continued optimism about the company's performance. Despite the mixed analyst targets, with a consensus hold rating and a downside from current levels, the company has still seen a solid boost in pre-market activity, up 28%. Given these upgrades and the positive sentiment around Agilon's operational progress, investors are keeping an eye on its momentum, especially considering the current price of $5.46. There's definitely some cautious optimism in the air, but the key will be how the company executes on its turnaround plan moving forward. Please subscribe, give the video a like, and watch more from our playlist. Thanks.